Hello and welcome to day number 96, and this is probably one of the most important lessons that you as a trader can ever learn, and it's called support and resist. Whatever you do in trading, if you are able to spot support and resistance lines, you will always be very well off, because you either will be able to trade it in one or two directions. Now let's start and have a look what a support and resist is. First of all, let's think about we're having a price going up to a certain point, and from that point the price goes down again. Then we go up again, and at that point we are going down again. So obviously up here we are having something like a resistance line. So the price goes to a certain point, then comes down, goes up to the same point, then comes down, and that might go on and on and on. So we might have similar attempts to go to this resistance line. At this resistance line, they are there for several reasons. We can go deeper into these reasons why they exist and how they get there in another video. But for the moment we just know that first of all they have to be horizontal lines. They are always around the similar price. So here obviously the price doesn't go any higher. So next time we meet one of this resistance line, we have two options. The first option would be we kind of have a candle here that looks, let's say, something like this. Color doesn't really matter. So we have a spike up over the resistance line, and in that case we are very likely to go down again. So the resistance in this case will hold, which means we now can trade whatever it is, whether it's a stock, a commodity or forex pair, doesn't really matter. So we now can trade it in the different direction, and at the same time we could see, okay, here we would have something where the price goes down. So we have some support here, we have some support here, we have some support here. And at both the support or the resistance levels, there's one of two things happening. Either, like in this example, we're going down, or now we can come up with another example where we actually break through. And a breakthrough, for me personally, always means that we have a candle, let's say something like this, and very important, we have a close of that candle. So let's say we're looking at daily candles, so we need to have a close beneath this support line in order for the support to break. If we have just spike down and we close above that line, that's not a break or a breakthrough. Now what happens is that people that are, let's say, trading these kind of support and resistance lines, if we actually break through and we stay below that, then all the people that were buying here because they thought it will go up because it's a support line, they are caught on the very wrong side of that trade. And now when you are at the wrong side of the trade and you see, let's say, something like a follow-up for the next day starting here, going down further, then these people want to naturally get out of their trades and they want to leave these trades. So they bought here because they thought, okay, we're here at the support line, we might go up. So if they bought here and they are now on the wrong side of the trade, they will start selling the bought commodity, forex pair, share, index, whatever it is, and they will cause some further downwards pressure. That typically means that if a support or a resistance level breaks, we will gain some momentum in the direction that can either be downwards in case the support line breaks, or in terms of the resistance line that can be upwards. And these support and resistance lines will become a basic ingredient of several other things we will see later on, different things in the market that we can see, like triangles, for example, and there will be a trend following or whatsoever. If we have higher highs here, for example, that would be the definition of an upwards trend. And the same here. Now we had we start to have lower lows, so that will be the definition of an upwards trend. So these lines we have changes in trends, so all the trend following traders will be in these trends as well. So first of all, everyone that got caught on the wrong foot, they will start to sell. Trend following traders will come in because they see, okay, now we got a lower low, so downwards trend, I want to participate in the trend because the trend is your friend, and so on. So they will put downwards pressure in that asset as well. And that works for both on the top as well as on the bottom, but very, very important, we need a close either above the resistance, or we need a close below the support. And number two, we want to see that the next day goes in our direction, which usually is the case, but we want to see something like a follow up in the trend direction. So if you have both of these things, the likelihood that we go down here is very, very big. And on the other side, if you would change here, so extend our resistance, if you would change here and we would see a close of the candle or of the day, so here we have our close, if that is above the resistance line, then we are likely to go up higher. So that will be typically trend following trades, support or resistance. We want to see a close above or below either support or resistance lines, and then we want to see a follow up in the trend direction. And we as traders, we can do both. First of all, if we identify these levels and we see that, okay, here is a fake or false breakout, then we might enter in the opposite direction, because we know with a very high percentage we will go further down. And the same here, if you would see a candle, let's say here for example, that doesn't close, well, that's a bad drawing, so this line here needs to be below the close, of course. So if we see a fake or false breakout here and we go up above that support line here, then we are likely to go up. So we can trade these things in the direction where we are bouncing back from these areas, or if you break through, we can follow them either up or down. The key here is to watch very carefully and make sure that when we trade the bounce back, that we really are bouncing back. That means for us, if we want to have a stop loss, that would be somewhere here or somewhere here, because as soon as we would go above this and we would close above there, that would mean, okay, now we have a close above it, so now we are trend following. And the same here, if we close below here, then that means our false signal now got a real signal, and we want to exit the trade, turn around, and then go down further, or of course on the other side, go up further. So be careful. If you see one of these, that's great. You could trade it up there until you see something similar here. And if you break through on either one of these sides, you want to follow this trade in the breakout or in the trend direction. This is something that's very, very good and handy to know. It's one of the things that you should train over and over, how to spot support and resistance lines, because if you're able to do so, first of all, you get two different options and you are able to make money in both of them with a very, very high likelihood. And if you're able to spot them, you have plenty of trades that you can do, and where you can follow a trend and trade these things down. So very, very important to know and to spot them. So that's one of the things where I would recommend you should train these. And if you have any questions, let me know in the comment section. Otherwise, hope this was helpful. Have a great evening, and I'm looking forward to talk to you again tomorrow when we are back into market trading and see that we are able to make some more money in our portfolio. And I already have one trade, at least one trade, that I will follow up tomorrow, and I will tell you about it when we are talking about the market. happens tomorrow. So thank you very much for watching, have a great evening, and goodbye!